first review session today, 3 o'clock here. How many can make it? Okay, yeah, we'll have a handful. A few people from the other class, that'll be fine. We'll try and record it, put it out there. You guys did take seriously getting ready for this quiz, right? So the first one was easy. It was. This one's not going to be. Okay, it'll be a crunch. And you really need to get ready for the test. It's really unfortunate we don't have a weekend before the test, but the snowier this in, don't let it do you in. Okay, so I hope you took this weekend, and I suggested that, right? Keep yourself ready. There's not much time now. It really scrambled. It did. Really scrambled. Anyway, the test is, there's multiple choice questions on the test, but don't let that throw you off. Well, some of them are pretty easy, but most of them you have to work problem anyway, and you just select the answer, multiple choice. That way you get graded faster. Right? You get that. So it's not going to be at all easy. It'll be twice as long as the quizzes. So I give you about an hour to do the quiz, twice as much on the test, got it? You're supposed to know it inside and out. The quiz, there's time to sit and think about it a little bit, figure out what you're doing and all that. Test it or not. You look at it, you know how to do it, you work it, you write down the answer. Okay, that's how it works. Fast as you can move. Okay. Remember, 80% is an A, right? So just relax. Get done what you can get done. Go after. Okay. So 60% is a B minus or something, and then something like that. Yeah. 40% is a B or something. Anyway, I guess you could not get everything right. That's for sure. Okay, and that'd be fine. There's a review when? Wednesday? For the test. And that's all computer time. Okay, so however you want to do it. There's all kinds of stuff you could watch. Video you could watch. Take it to reviews. And I'll try to post all these reviews. But mostly it's just word problems. So you can do this in your sleep. Just move it. Anybody have any questions about anything they want to look at, a particular problem they want to do? Well, we don't have very good attendance today, do we? That's okay, because the people going out here today, they're not going to stay anyway, probably. It's just normal. I never lose less than 30%. 40% is kind of a high number. Had that last night. And I'd rather they decide early, wouldn't you? If you were going to drop a class, when would you like to drop the class? Before you started. Yeah, first week at least, right? Or don't sign up for it in the first place. So some people have 18 credits and they've already been kind of thing. That's fine. I understand. I don't know. You would think after me being here for 18 years, people like me being here. There are lots of other people, as some of you already know, on campus who make students work hard. Lots of other ones. You'd think they would sign people up for 18 or 21 credits when they've got a real professor, right? Really tough class. Yes.
I have some question on this one.
Good.
For these, did you guys put all of these entries here or in the related one stuff?
Oh,
further down?
when you do journal entries, this is on quiz 3 and 4, number 5A. I hope you worked this already. There's only one journal entry. It's just the debit and the credit. When you write your journal entries, on 5A, they purchased equipment. All that happened here was they purchased equipment.
Okay.
And they signed a note, right?
Yeah.
And they gave them cash. What would be the journal entry for that? Let's go ahead and do that. Let's do A. And number 5 on quiz 3 and 4, the practice one I gave you. Okay. Number 5A. Okay. Let's do that. 82 on your right. Doesn't like that. Whoops. Setting goes away. Okay. Number 5 from the quiz 3 and 4. Okay. And it's A, was it?
Yeah.
Okay. So what they got was A. What would they buy?
Equipment.
Equipment of some kind. Debit equipment because it's an asset, right? How much is it? 25?
35.
$35,000. And they did what? They gave them A.
$10,000 down payment.
Which is?
Debit or credit.
Yeah. And then what else did they give them? Their promise to pay later, which is called A.
No.
Note payable. Yeah.
Right.
For $25,000. Okay, now it talks about interest and it talks about depreciation, and it talks about life, the thing, and salvage value. What do you do with all that? Nothing.
Well, I just wrote it down so that way I had it.
Well, you can write it down if
Yeah.
you want, but that would be the entry. This would be the answer for the first one.
Yeah.
Okay. And what is the interest anyway? What's the interest rate?
6%.
And how are they going to pay? Isn't it 2 payments in this one?
Yeah.
And weren't they $12,500 each?
Yep.
That's the principal. And then they're also going to be plus interest, right? Yeah, let's work this one. It's okay. It's a good one. All right. And then there's also going to be depreciation, right?
Yeah.
Okay. What's the life of the thing?
6 years.
Okay. So it's going to last for 6 years. Do they have a salvage value or residual value there?
2,000.
They is me, by the way. I wrote this thing. 2,000. Okay. It's going to be. We think we're going to sell it for 2,000 at the end of its life. So at the end of 6 years, we want to have a remaining book value of 2,000. Makes both. Makes sense. Okay. And when did they buy it, by the way? What was the date?
February 31st.
This is January 31st. What's their year end? December 31st, right? Okay. So that's what's going on. When are these payments, by the way, these 2 payments? One is going to be when? They're every 6 months. So July 31st? And when's the last one? December 31st? Actually, it's January 1st, isn't it?
January.
I screwed up. The payments are going to be... The payments are going to be August 1st, aren't they? Right? Probably. Either July 31st or August. Yeah, or August 1st, 6 months later anyway. And then the other payment is going to be January 1st of the next year, isn't it? Okay. They're going to have to accrue interest at the end. Okay, so what are we going to need to do? When is the first payment? August 1st or July 31st, whenever it is. So that's a later question down there, isn't it?
Yeah.
Okay.
It's G.
What would we do? That's G. Okay. What would we do then on that date? When do we make the payment anyway?
It says July 31st, pay
Okay.
the first payment.
Okay, that's fine. Okay. Good. Same thing, right? Okay. What do you want to do?
Debit note payable.
Debit note payable because you're getting rid of something. You're not paying the whole thing off, though. How much are you paying off?
Well,
12,500 of it. So half of it's going away, right? Excellent. So we'd still owe them the other half, of course. Everybody agree with that? Okay. What are you going to pay them with? Cash. Are you going to pay more than the 12,500?
Yeah.
Yeah, because you're going to have what?
Interest.
Interest. Okay. So what do we do for this one? We got to figure out how much interest on. How much do we have borrowed? 25,000, right, guys? Not 12,500. It's 25,000. They're going to want interest on all the money, aren't they? That we owe them. They don't get interest on the 35,000, right? Why would I pay interest? I gave them the cash to 10. And I'm not only going to pay interest on the 12,500 because I owe them 25,000, of course. Okay, so what's the interest rate? 6%. But that would be for how long? A year, not 6 months. That's a year, right? So then you'd have to take that times what? 6 twelfths divided by 12 times 6, right? It's half a year. Okay? So how much was that? $750. So how much am I going to pay them? Not 25, 12.5, the half, right? Plus what? 750. How much is that? Yeah. And then how much was the interest? 750. And what do we use this cash to do, or this note to do? We bought a piece of equipment. What are we using the piece of equipment to do? Generate revenues. What's one of the costs of generating the revenues? Expense. Named interest expense. Got it? That's why it's an expense. It's one of the costs I incurred to get my revenues. Okay, good. So we're in good shape. All right? Then what else happens? Way down at the end, we're going to do something with the interest. What letter was that?
Would it be in?
Yep.
Do we need an entry relating to the debt?
Yeah. Okay. And this is at December 31st, right? Okay. And I'm assuming, I screwed up the date a little bit. I'm assuming they're going to pay it January 1st. Maybe I said that. What would we do at this date? Well, not quite. So we're not paying. So what would we do at this date?
You would do what you've used up, so.
Actually, you know what, it's due January 31st, it's
Yeah.
December 31st now, so I guess it is right. January 31st is due, we're not paying yet, are we? So the note payable doesn't go away, we're not gonna do that again. We're not giving them cash, we're not gonna do that again, but did time go by? Yeah, so what are we gonna have? Interest expense, aren't we, guys? I think I'm gonna have some interest expense debited because I used it up. And if I didn't pay it, it'll have to be interest what? You didn't pay it, you're just accruing it here, you guys. Accrual, what is it? Interest. You owe it to them and you didn't pay it, interest what? Payable, of course.
Why are we not doing another no payable for this?
Yeah.
Because we're not paying them until January 31st. The second will be January 31st, but it's due January 31st. I wrote my payments down wrong. Way to go. It's July 31st and January 1st. First payment is July 31st. The second one is January 31st of next year, right? Next year. But we're doing financial statements at December 31st, so what are we going to have to do? This is July 31st, really. Okay? What's the deal? At December 31st, time went by. So I have interest expense, and I owe the interest. If I paid it off early, would they want the interest? Yeah. So do I owe them the interest? Yes. And do I have the expense if time went by too? Did I get to use the money? Yes. That's the idea. So what do we do with this thing? How much do we owe them now? Not 25 anymore. What do I owe them?
12,000.
12,500. Does everybody agree that if you borrowed 25,000 and you paid them back 12,500, that you would now owe them only 12,500? Right? So how much interest are you going to pay? 6% of 12.5, but be careful, that would be for a whole year. How much time went by between July 31st and December 31st?
5 months.
5 months, so it's times 5 12. Got it? So how much is that?
It was 312, 50 cents.
312. Right? That makes sense? When I pay them, I'll pay them 6 months interest. But at this point, I'm only accruing 5 months interest. Does that make sense? It's only 5 months went by. So this is tough. This is hard. So how much interest expense do we have? $312.50. And how much interest payable do I have? $312.50. Wow. Well, let's do one more thing. This wasn't required on the quiz, but what would you do on January 31st when you pay it? This is when you'd pay it, right? What are you going to pay off? Now, the other half of the note payable is paid, right? Everybody want a debit notes payable? Makes sense, right? 12,500. What are you going to pay them with? Cash. How much cash are you going to give them? Let's compute it. It's 12,500 times what? 6%, right? So I'm going to give them the 12.5 plus 6%. But now, how many months is it? Be careful. Well, we didn't pay this one yet, so it'd be 6, wouldn't it? I haven't paid any interest for the 6 months, so it'd be 6/12 in terms of the cash I'm going to give them. How much is that? $375. It's half of the $750, right? You know, 12.5 instead of 25,000. So that would be the interest. So I think you're going to give them 12.5 plus 375. What do you guys think? Is that right? How much is that? 12,875. Okay, good. Well, what else? What am I paying off when I give them that extra 375? It's going to be interest expense, but it's only 1 month's interest expense. How much is that? What would 1 month be? Take 375 and divide it by 6, right? Or it's the difference between the 312.50 and the 375, right? Because this is 5 months, this is 6 months. How much is it?
62.50.
It's 62.50. Well, what's the rest? I need another $312.50. What is it, everybody? I'm paying off the interest payable. Wow. That's how it would work.
Okay? What other piece do we have? Depreciation. What did we say? 6-year life, 2,000 salvage value. We bought it January 31st, and we're going to depreciate it through when? December 31st. People doing this quiz always miss this. They missed that one too, the last one we just did, right? Why would you miss this 312.50? Did you do 6 months interest instead of 5? Count the months, guys. How many months is there between January 31st and December 31st? Only 11. Huh? Is that tricky or just realistic? It makes it harder, doesn't it? Okay? So what do you think, guys? Let's do the depreciation at December 31st. What would you do for the depreciation? What was the cost of the asset? Be careful, it didn't cost 25, it cost how much? 35, excellent. So there's a common mistake, people depreciate based on 25. How much do we want to have left at the end, the salvage or residual value? How much is it? 2,000, good. So how much are we going to depreciate? It's depreciable value. 33,000. What letter is this one, by the way? Okay. Yeah. All right. 33,000. And then what's the life? So each year I am going to take how much depreciation? What would that be? 5,500. Lots and lots of people give me that much depreciation expense, but that's not right, is it? How come?
It's 12 months.
12 months, or well, that's 12, and how many months did we really have? 11. So you take 11, 12. So what you're going to do is you're going to depreciate this thing $5,500 a year for 5 of the years, but in the first year, you're only going to do 11 months, and then you'll do one more year when you do what? 1 more month to get them all done. So what's 5,500 times 11, 12, everybody?
5041.66.
5042 about 166. Good enough. Okay? Debit what? I'm using it up. It becomes a what? I'm using it to generate revenues. It becomes what, guys? Depreciation expense. And credit what? That contra account reflecting using up the piece of equipment is called, anybody? Accumulated depreciation. That's it. If it had been a whole year, it would have been 5,500. Okay? So those are pretty tough, weren't they? They were the toughest problems on the place. Okay? That's good to go over. All right. Let's try something else. You guys are so excited about that. Let's try, I don't know, AP 4.3 on page 211. And then we'll do these journal entries and talk about whether they're deferrals or accruals, revenue or expense, obviously, and then what's the impact on the balance sheet and income statement, which would be AP 4 or 5, I suppose. Okay, so let's give these a try. So let's go way back there in the corner. You want to do this one? Yeah, you do. Sure. On December, during 2014, office supplies of 1,200 were purchased for cash. They debited to supplies. That should be supplies inventory now. Okay? And we'll do this 2 ways. One where they go to a balance sheet or a real or a permanent account, which is this one. And another where they go to a income statement, right, or a nominal or temporary account. You guys know what that stuff is now, right? Okay? So we'll do it both ways. Let's do it the way they have it in the problem first. So this is AP 4-3. Why not? Okay. All right. So what would they have done when they bought the supplies, that 1,200 of supplies? What would the entry have been? Debit what? Supplies, and put the word inventory on there. Well, it's not expense. The way they did it, they went to the inventory account, right? They debited supplies. They mean expense. I wish the author wouldn't do that. I'm sorry, they mean inventory. I wish the author wouldn't do that. Lots of companies just call it supplies, but they know it's supplies inventory, right? Okay. So, yeah, supplies inventory, they would have put 1,200 in. And what would they credit, by the way? It says cash, so it's cash. What if they bought it on account? We're gonna pay them later. Accounts payable, yeah, sure. Okay, so we've got supplies inventory, don't we? With how much do they add to it? 1,200, that's our entry right there, right? Okay, and what did they start with? Nothing? Is that right? When, it was 450. Oh, what does it say? At the beginning, it's 450. Be careful. So how much would they have? You know, if you started with 450 and you bought 1,200, I bet you'd have 1,650, huh? That's how much supplies they have. What is it at the end?
400.
So how much don't you have? 1,250 is gone, right? Where'd the supplies go? You used them. What do things become, assets become when you use them up in an attempt to generate revenues? Expenses. Notice I always say attempt. You don't always get the revenues, but you always get the expenses. If I hire you to work for me for $50,000 a year when you graduate, and you earn no revenues for me, oh well, I still have the expense, don't I? We only do that for a while. Hopefully not a whole year, right? Okay. But if she comes to work for me and I pay her $50,000, she makes $150,000 revenues for us. Oh boy, that's good. I guess I'll have to give you a $25,000 bonus, and then I'll keep the rest. Yeah. And then the next year I'll have your salary be 75, and hopefully give you half of that as a bonus because you're so good going forward. No problem. Okay. I'm not kidding. That's how it works. I do believe in trickle-down economics. You've heard of trickle-down economics, right? You make the rich people rich enough, everybody else benefits. There's not a lot of evidence of that, unless you're in a management position, and there's plenty. If a rich person you work for, you make them a lot richer, they won't let you leave. How do they prevent you from leaving? They make it too expensive for you to leave. They give you more and more and more and more, right? I once had a boss, and I went back into teaching about exactly how much would I have had to pay you to have you not do something stupid like going back to teach for 1/3 the money that I'm paying you. Well, I don't know, maybe it was 10 times. Now you're not worth that much. See you. So go teach. Yeah. 3 times apparently. So what do you want to do now? Okay. To our woman back there that thought she got off the hook. What's the adjusting journal entry at year end? Is December 31st year end, guys? Companies do not all have December 31st year end. We already talked about that, right? It can be any date. But what do they do with that? What do they need to do? They used up 1,250 of it. What do you want to do? Debit what? Supplies expense. Nothing. That's the expense. Okay? What do you want to credit? What don't you have anymore? Supplies inventory. And you're done. Now, is that a deferral or an accrual? When you debited supplies inventory, what did you do? You recorded an asset which is later going to become an expense. I bet it is a deferral of the expense until later. You like it? Okay. Let's do an or here. I'm changing the problem. What if I said this would have been, I'd say, it went to a balance sheet account, a real account, a permanent account, huh? Okay. Let's say instead that on the date that they bought it, right? So this is an alternative. They went to a nominal account or a temporary account, which is an income statement account. What would they have debited instead of supplies inventory? Of course, supplies expense. Credit. I guess cash. You gave them cash, huh? But look what this would do. So now what would I have in supplies inventory when they started? How much did they say they had? 450, right? And what would I have in supplies expense now? $1,200. Everybody see it? Because they put it in there. At the end of the period, you go count how much you have, and how much do you have? 400, right guys? So tell me what the adjusting entry has to be. What would you do? And you get 450 on the balance balance sheet of supplies inventory, but there's only 400 of supplies. What do you need to do? Credit it by 50, of course. It's just an adjusting journal entry. Supplies inventory goes down by the 50. And what's the debt going to have to be if I use them up? Supplies expense, of course. So I get another 50 of supplies expense, don't I? And what does that give me in supplies expense? 1,250. What did I have here in supplies expense? Started at nothing and I put 1,250 in. Boy, those numbers are real familiar, aren't they? Right, guys? Nothing to this. Do those numbers look familiar or what? It's exactly the same. It doesn't make any difference how they're recorded. What matters is what you have on your balance sheet, your income statement, and your financial statements, right? When you issue them to your stockholders, and to the general public, and the government, whatever. Okay, so what happened? Everybody see it? Okay, so good, good. That was easy, huh? Let's try the next one. It says the company catered an evening gala for a local celebrity. $7,500 bill was due from the customer, right? They catered it at the end of January 2015. No cash has been collected and no journal entry has been made for this transaction. Okay, so who wants to do this? You want to do this? Do it. Nobody wants to do it. Go ahead. What happened? It's December 31st. They did this catering, $7,500 bill. Why do I do catering? Make money to earn revenues. What's that? Yeah, we're doing 4-3, aren't we? 7,500 catering bill. We did the catering, didn't we? Why do we do catering? To get richer, to earn revenues, right? I don't know. And they haven't paid us yet. So what do you want to do? No cash. We have an accounts receivable. What is that? That's an asset, isn't it? You have more accounts receivable for 7,500 or 7. Yeah, 7,500. It's a nice part of the account. Okay, and credit what? Although a long time ago, my kids' weddings each cost $20 grand. Jesus. Anyway, I didn't promise to pay for weddings. It's my wife's fault. I paid for college educations, not for weddings. People dumb enough to get married, you have to pay their home. Don't you think? I paid for my son's wedding. I thought you were only supposed to pay for your daughter's. That's what I said. They both got married the same year. This was stupid. He married some girl that didn't come from a rich enough family. What's that about? He still should have paid for it. Don't you think? I paid for my wedding. All right. So, still pissed about it. Anyway, they haven't paid me back, either one of them either. Well, they both give me grandkids. I guess that's paying me back. So, it's all right. Write off the 40,000 bad debt. What's that?
I said you like the grandkids better, so.
That's right. I don't like them at all. That's right. I didn't even get to eat very much at these things. Everybody ate all the food, and by the time I got there, luckily there was wine left over from the first wedding. Bottles and bottles and bottles of it. I took it home. Yeah. Paid for it.
That's all you need right there.
Yeah. The other one was out in Oregon. I couldn't even take the stuff home. What's that?
Money was worth more when you got married.
Oh, it was years ago.
I mean, I'm just saying.
8, 10, what is it, 40 grand now per wedding?
Like, inflation is really bad.
Yeah, there's been no inflation on anything, right?
No.
But, I don't know, 8 or 10 years ago when they got married, cost half as much as now. But there's been no inflation. They keep telling us there's no inflation. That's because wages haven't gone up, right? Job that paid $50,000 10 years ago, these really good jobs that you guys can get, is $55 now. How come that didn't double? Cars cost twice as much. Yeah, okay. Anyway, you get the drift. What do you want to credit with here? Oh, for God's sakes. You're thinking debit accounts receivable and credit cash. You're guessing. What happened? Revenue. I hear revenue. Why is it revenue?
Because
They did the catering and earned. No. The people on the other side. You're doing the other side. That's what's messing you up. Okay, this is good. It's all right. She said accounts payable earlier, didn't she? Who has the account payable?
The customer.
The customer has an account payable. Who has an account receivable? We do, right? Our customer has an accounts payable. We have an account receivable exactly equal to that. They used up the catering services. What would they have? Some sort of expense. Catering expense, they could call it, right? Whatever it is. Okay? Gala, food expense, whatever. Okay? Gala, how do you say that? Either way. That's what part of the country you're in. Okay? Debit catering expense and credit accounts payable, huh? What would we do, of course? We earned the catering revenue, didn't we? I'd increase revenues all over. By credit. Okay? That's revenue. Okay? So this would be our entry. Is that an accrual or a deferral? I'm accruing the revenues even though I have not been paid yet. What would you do? We'll let you sell yourself here a little bit. What would you do when you get paid? Debit what? What do you get paid with? Cash. So whatever it is, $7,500 or more, if there's more services you gave them, or less maybe. They're making payments. Credit what? What don't you have anymore if they paid you? Yes. So we increase it when we sell them stuff, they don't pay us, and then we reduce it when they pay us, huh? Everybody agree to that? By the way, what would it look like on this side if it had been that? This is an accrual of revenue. That would have been an accrual of expense, right? What would we do if we owed people money and we paid them? Debit accounts payable, because I no longer owe it to them if I paid them. True? Or whatever the number is. Okay, and credit? Cash. Sure. So debit accounts receivable and credit cash. That was good. Okay, anyway. I talked too long. That's good. All right. Let's do another one. On October 1st, 2014, a one-year insurance premium on the equivalent amount of $1,200 was paid and debited in full to prepaid insurance. Okay, we'll do this one two ways, too. You're here in the front. You want to do this one?
Okay.
Yeah, okay. What would we have done on October 1st? Bought insurance.
So it would be insurance, that could be debit, insurance expense.
Well, no, they said they debited in full to prepaid.
So
They didn't go to the income statement account. They went to the balance sheet account. Okay, it doesn't make any difference which one they do, okay? Okay. So, but they did go to prepaid insurance for $1,200. And credit what? What they give? Cash insurance. Okay. An alternative to that would have been what? Could be an or. What could they have done instead? If they didn't go to prepaid insurance, what would be logical? Insurance expense. So they could have done that. So I could say, they went to a nominal account, right, an income statement account. Got the idea? Temporary. This would be a permanent balance sheet real. This would be income statement, temporary, nominal, right? 1,200. And credit what? Cash. So it could have been that. Either one's fine, okay? But it's going to change the adjusting entry, isn't it? When's the year end? That would have been in October 1st. When's the year end? They use December 31st. It could be any day of the year, but they're using December 31st. Fine. How many months have gone by? You sure count October, right, guys? How many months? 3 months. What if it said October 31st? 2 months then. Don't count October. That's all. Be careful. Be careful. Okay, so 3 months. What do you want to do? How much has been earned? Well, how long was the policy for? It's 12 months. It's 1 year, isn't it? Okay, it's 1 year. So it's 100 a month, isn't it? So how many months have gone by? 3. So we should have 300 of what?
Wait, does it matter that it says that the coverage began on November 1st?
Oh, did it really?
Yeah.
Oh, yes, it does. And they paid it October 1st?
Yeah.
Cool. That's a tough problem. Okay, yeah. Well, they paid it there, but how many months go by between November 1st when coverage starts and year end? 2 months. Oh, way to go, Keith. Yeah, they made it tougher. Okay, 2 months. Okay? I should have actually read the question. Okay, 2 months. So if only 2 months went by, how much insurance have we used up? 200. How much have we not used up? 1,000. So what do you want the 1,000 to be? Where do you want it to show in your financial statements? Prepaid insurance on the balance sheet, right? And then where do you want the 200 that was used up to show? Insurance expense on the income statement. That's it. How are you going to get the insurance expense on the income statement? Debit. What do you want to debit? You put insurance expense in your income statement. Insurance expense. Yeah, that's it. We're doing it, you guys. That's all there is to it. Debit insurance expense. Of course, I would have missed it, but it's 200, not 300, right? Because the policy didn't start until November 1st. Okay, good. And what do you want to credit? I'm not paying for it again. I'm using up some of the prepaid. Good. So does everybody agree now that what we've got is prepaid insurance with 1,000 in it, right? 1,200 less 200. Okay? So prepaid insurance, we did this. We put 1,200 in there, and then we took 200 out because we only want to show 1,000 on our balance sheet, right? Insurance expense had nothing in it relating to this policy. Could have other insurance policies, probably would. We put 200 in there, didn't we? Okay, everybody good? Related to this policy. Well, what if we'd done it this way? What would you need to do? If we'd have put all of it in insurance expense. Now we'd have insurance expense with 1,200 in it, right? Prepaid insurance. We'd have nothing in it. What would you need to do? We have 1,200 here, guys, because we put 1,200 in it. We have nothing here because we didn't put anything in it. Right? We're creating this. So for this policy, what do you need to do? How much have you not used up? 1,000. You want prepaid to be 1,000, don't you? 0 right now. What do you want insurance expense to be? Only 200. This is very convenient. What's your adjusting entry going to do? Debit prepaid insurance for how much? 1,000. So it'd be a different adjustment, but we'd end up at exactly the same point in the financial statements, which of course what we want is the correct financial statements, right? Okay, and then we take 1,000 out of here. Look at that. What a deal. Reduce insurance expense by 1,000. What matters is what's in the balance sheet income statement when we're done. Got it?
So which one for the quiz do you want us to do?
Whichever one I ask for. Ah, what if I say they originally recorded it to an asset account? What if I say they originally recorded it to an expense account? Those mean different things. I want you to be able to tell them apart.
Okay.
So you figure it out. You take control and figure it out. If I don't tell you, just go to the asset account probably. It's more common that people would do that. But you know what? If you don't, and later you do your adjusting entry right, it's fine. But if I tell you where it went, like they did in this problem, they told you it went to prepaid, so you do it prepaid. Okay. If I don't tell you, I guess you could do it either way, couldn't you? Then you can say, Keith, I did it right. Then I marked it wrong.
Yeah.
You can say, no, I did it right. Look at that. Look at the source entry I did. This is the source entry. And look at the adjusting entry I did. As long as I didn't give you instructions, I guess you could do whichever way you want, right? Both are fine. So, good question. I like that. Okay, good. Very flexible stuff, guys. Okay, so let's see. On December 31st, 2014, repairs on one of the company's delivery vans were completed, and the cost estimate is $600. We don't have the bill yet. Hasn't been paid or recorded, but we know we did it. The repair shop will bill us later. So who wants to do this one? You want to do one? Okay, go.
Okay, so it's, you haven't paid it yet for the accounts payable.
Debit or credit accounts payable?
Is to be credit.
Yeah. And this could be an account payable, or you could be repair services payable or something. But accounts payable is fine for this one. How much is it?
600.
You want to debit? Because you have more liability, right? You owe them. Whether they send you a bill or not, you still owe them, don't you? And what do you want to debit?
Like repairs.
Yeah, repair expense. I like it. Okay, absolutely. What'd you just do? Accrue or defer the expense? Accrued it. We're deferring the payment till later. You'd think that way, but we're not thinking about cash, right? What are we doing? We're accruing the expense even though we haven't paid for it. So this is an accrual of expense. Yes, ma'am?
Can you explain
explain that like one more time? The accrual versus.
Accrual versus deferral. Okay, an accrual is where you have either earned the revenue, which would be debit accounts receivable and credit sales or service revenue, right? You've earned the revenue, but you haven't been paid. That's why you're debiting accounts receivable instead of debiting cash. That's an accrual of revenue. Accrual of expense is you've incurred the expense, but you haven't paid for it yet. So that's what this is, debit expense and credit liability, right? That's accrual. What's deferral? Deferral is I got paid, but I haven't earned it yet. So that would be debit cash and credit unearned revenue. That's deferring recognition of the revenue. Recognition just means putting on your income statement. I'm deferring recognition until I earn it, even though I got paid in advance, okay? All right, that'd be unearned revenue. So you debit cash, credit unearned revenue, and later when you earn it, you debit the unearned revenue and credit revenue, right? Okay. Deferred expense would be a prepaid. I credit cash and debit a prepaid of some kind. Then when I use it up, I'll expense it, right? So I'm deferring the expense until later. So when I use up the prepaid, I debit the expense account, credit the prepaid. Get that? Get there? That? More simple. Okay. All right. Good. All right. By the way, what would you do on this one when you pay it? They send us the bill and we pay it.
Debit.
Debit accounts payable.
And then credit card.
Credit cash. We're done. Okay. Good. Good. All right. Let's try another one. That's a great question, by the way. It's tough to get it straight, isn't it? Okay. Keep it straight. All right. On November 2014, Bill's Catering signed a lease for a new retail location, providing a down payment of $2,100 for the first 3 months, which they debited to prepaid rent, and it could have gone to rent expense, but we'll do what they did. It was prepaid rent. Who wants to do this one? Want to do one? Yeah. Wouldn't that be fun? So what they did was they told you what they did, so that's pretty easy. Okay, so in November, it starts December 1st though. So sometime in November they made this entry, but it starts December 1st, November. Okay, they made this entry. What would their entry be? They signed a payment and gave a down payment for the first 3 months rent. They debited. It was the asset account, right? Named. Says it right there. Prepaid rent, right? Okay. That's the asset. For 2,100 was it?
Yes.
What'd they give them? Yeah, when you make a down payment, what do you make your down payment with? Cash. So that's an asset you have less credited, right? Good. All right. So I just exchanged assets. I have more prepaid rent and I have less cash, right? Exchange assets. More of one asset, less of another asset. Now, what's going to happen to this? It starts December 1st, right? We're using it. By December 31st, what happens? What period of time was that for, by the way? 3 months? We've used up 1/3 of it, right? At December 31st, we used the month of December. That's 1/3 of it. So what do you want to do at December 31st? If I used up 1/3 of it, what does it become when I use it up? When I use up assets, what do they turn into? Expenses, right? Using up an asset, trying to generate revenues. I'm paying rent on my store maybe, right? I'm using the store, selling things to people, so the cost of the store is an expense, right? I don't care if it's a warehouse or whatever, okay? It's an expense. So it's for rent, so what do you want to call it? Rent expense. And how do you increase expenses? All of them. Debits, because they reduce equity, and equity's on the right, and therefore equity is increased for the credit, reduced for the debit, right? And as I'm increasing expenses, I'm reducing equity. That's always in the back of your head, right? You have to figure it out. If you don't know, don't try to remember. Figure it out, okay? So it'd be debit rent expense, wouldn't it? 700. It's 1/3 of it, right?
Yeah.
And credit what? What do we no longer have? Oh, you're gonna pay them twice? I want to do business with you. You pay me in advance, and then later when you use it up, you pay me again. Thank you, thank you, thank you. Maybe we can think of a third way you could pay me. You could pay me 3 times. You're not doing that. How many of you guys pay your rent more than once? Over and over, on purpose, right? No, that's month after month. It's not the same month. Okay, all right. So what do you think? Prepaid rent goes away. I've used up the assets. So what's left in prepaid rent, you guys? 1,400, 2,100 less 700, right? It's true, isn't it? Okay, are we good? Okay. So on July 31st, let's do one more. July 1st, the company purchased a new refrigeration display for $18,000. Oh, and its depreciation of $2,600 has not been recorded yet. Who else wants to do it? You want to do this? 2,600. That's okay, I just read it for you. Depreciation is $2,600 for the year. What do you do? Debit what? It's an adjusting journal entry. Debit what?
Depreciation expense.
Sure. Because we used it up, right? This is reflecting using up the asset. But we don't credit equipment. Why not? Because equipment's not really going away. The refrigerator display is not going away. It's still there. It's just getting older. We're using up its utility value. So we put the amount we used up in a contra account named accumulated depreciation. That's it. And what does that do? That reduces assets. Okay? So let's take a couple of minutes we have left, and let's do a couple of these. If you take a look at AP 4.4 or AP 4.5, you've seen those on my quiz already, right? Okay. Tell me what happens with each of these. We'll start with this one and work our way back to assets, liabilities, equity, revenue, and expense, and net income. What happens as a result of making that entry? And then we'll ask ourselves what would happen if we failed to make the entry. Okay, on this last one here, debit depreciation expense, credit accumulated depreciation. What does a debit depreciation expense do? Increases the expense, which does what to net income? Decreases it, which does what to retained earnings, which is an equity account? Decreases it. That's it, right? Okay, what does a credit to accumulated depreciation do? It increases accumulated depreciation, but that's a contra account, which does what? Decreases my assets. You got it. Okay, what happened to liabilities in that entry? Nothing. There's no liability there. What happened to revenues in that entry? Nothing. There's no revenue. I'm done. Right? I'm going to decrease assets, decrease equity, and the reason is I increased expenses, which reduced net income. That's it. What if I fail to make this entry? I should make it, but I don't do it. I'll ask you those questions too. Right? What do you do? What are you going to say? Assets would be overstated if you fail to reduce it. No effect on liabilities, of course. There's no entry to it. Equity? Overstated. Good. Revenues? No effect. Expenses? Understated, because you need to increase them. Net income? Overstated. Too easy to believe, huh? Let's do this one. What does that do? By the way, when you take the test, boom, 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 match can move, right? By the way, you got to get the journal entry right, or you will never get this overstated, understated, right, or increase, decrease, right? Please. The entry's the hard part. Business is hard. Accounting's easy. You got to figure out what people did, right? What are they doing? People create new ways to make money all the time. Ways to extract wealth. It's okay, as long as people think it's valuable, right? If you want to pay $800 for an iPhone, I guess go for it. It's all right. Not me, I hope. No idea what my wife paid for the new one she's got. But she did that, not me. I'm not irresponsible like that. She wants a $45,000 car, too. Stupid. Okay. There are $10,000, there are $1,000 cars. Well, they don't run very well. But, you know, so you can get a really nice car for $15,000. A little Hyundai type thing. Really nice. It's got 4 wheels and runs. Really nice. Okay. Brand new. $15,000. You can. I've seen that. Yeah. Why would you spend $45,000? I don't know. 4 wheels and a motor. Yeah, I don't get it. Okay, anyway, so she's cute. We'll do it. Okay, rent expense. What's the deal? It increases by $700. Net income decreases by $700. What does that do? Equity decreases. Revenue. There's no revenue in there. Nothing. Liabilities. There's no liabilities in there. Nothing. What happened to assets? Prepaid rent's an asset, isn't it? Less. What if you failed to do it? Overstated. No effect. Overstated, no effect. What's this one? Understated. It was the same as the last one. Oh well. This one's overstated. Got it? Oh, those go clear off the screen, don't they? See you guys. Work. 3 o'clock, here. We don't have lives. We're gonna come in here and talk about stuff. Come loaded with questions, you guys. Samples you'd like to see or something.
See you Wednesday, Keith.